Why is the earnings per share so low if the revenue is meeting expectations? Okay, so that's the one thing I'm going to keep in the back of my head. Now, guidance, what they expect for the next financial year is up tremendously. So the estimate was 23.6 billion. They're expecting on the low end 26, the high end 30 billion in revenue for financial year 2025. Now that's fantastic. However, the problem is their gross margins of 11.2% versus 15.5 in Q3 and 17% the same quarter last year. That is a huge issue that margins are going from 17% down to 11. What are they going to be in 6 months, 12 months, 2 years from now? Is that going to go down to 10 to 5? It's a huge issue. And the net income also, like we just mentioned, went from 350 million versus 402 million from Q3. That's a problem, right? We're losing $50 million in what we're taking home after taxes. So again, diluted net income per common share, 551 versus 656 in Q3. So this is not a good sign. At this pace, this trajectory, SMCI is not a company I would personally like to own. And really, what we saw was strong revenue guidance, but margins continued to get squeezed due to increasing competition from Dell, HP, Lenovo, etc. A lot of analysts are pointing this out, but it will do well for Nvidia because they're getting business from all of these suppliers regardless. Now, looking at the chart, I think one of the best tools we could use is identifying support and resistance, specifically when those flip-flop. And what we're seeing is going back to February of this year, we have held support to this $670 range. So we see here it broke out, it had this massive rip up, and then we had support. So it came all the way down and then it bounced to all-time high. So this is support one. We saw the same thing here, right? It pushed all the way back up, support two, right? We saw all these little, reattempts that happened over May, June, July. And now what we're seeing is the breakdown of that first level, consolidating on this line, and then now it broke that support. So this line that goes back from February here is now destroyed. This is a 6 month level of support. So if we want, right, we could go and make this, let's say pink, make it two. And now we know this is our 6 month level of support that has now been broken. Now, how do we identify that it's a true flip-flop? Well, we now have to go and retest that level and reject it, which is exactly what happened today. And if we zoom in a little closer, right, what are we noticing? Right? This is just over the past few days, let's say the past 7 to 10 days. We've seen the stock break down, and then what happens, right? It tries to get on the north side of this blue line. We see it here, it pushes down. It tries again here, it gets pushed down, touches the line perfectly, rejects again, right? You see the pattern here, right? So this is multiple days, right? This is 1, 2, 3, 4, 5, 6, 7, right? And then again, 8, 9, 10 today, 10 days of not being able to get above this line. And then on earnings day, we see a huge spike up, retesting the same level of resistance and then getting smashed down. Okay, this is that last test of liquidity and then gets smashed. It's not a coincidence. It's not by chance that this number is so common over the past 8 to 10 days, and then it just so happens to get knifed down at that same point on earnings day. Okay, and we know it's algorithmic trading and buying, so that is not by random, not by chance. So this is without a doubt a breakdown here, resistance, and then finally breaking that 6 month support, coming back, retesting it, rejecting it, and now it will get very, very ugly if we break this previous low at 529. So that's pretty much what I'm going to be looking for right now. Any sort of pivot points and how to understand, where it could potentially go. For me, after this type of report, and if I'm feeling a type of way about not owning it, I'm sure Wall Street is not going to feel happy. I'm sure the insiders are going to be taking a lot of profits here and dumping stock. So you just have to be cautious. If this is a bad report, if markets continue to bleed, this will get liquidated. This can fall 100 points very fast. Okay, the last part of all of this is really just telling you about the 10 to 1 stock split. We've seen a lot of companies do that recently. I think it's just a matter of the liquidity and overall volatility. I think it's more the volatility in the trading that SMCI, you can have 100 or a multi-hundred point move, and then when it does a 10 to 1, you're really going to have maybe somewhere between 3 to 5 point swings, which is much different. Traders prefer, those larger swings, larger opportunities, higher value tickers. So leave a comment in the section below. What is your opinion on that? Would you prefer to trade a stock that's $500 or $600 with the ability to have a 50 or 100 point swing? Or do you like the fact that all these tech stocks are doing the 10 to 1s? They're making the price smaller, but you're able to, again, have that 3 to 5 point range each day. You let me know your opinions in the section below. The only other thing I can say is just respecting this macro trend line that we have here. It's sort of this descending channel. I know a lot of times people could say, hey, doesn't that just look like a really big bull flag? Yes, it does, but given the circumstances here, it'd be really doubtful if it continues to do something like this. I don't think that's going to happen. Now, if the earnings was really positive and that net income was through the roof and it maybe beat by 50 or 100 million, sure, I think this chart could look much different than where it is now. But for me personally, it's not something that I'm going to prefer to own in the next 3 to 6 months, as this is clearly a huge issue. I don't think it's going to get better quarter over quarter. Even if they continue to make more money, they're earning less. So it doesn't make sense. That's my opinion personally on it. Doesn't mean that I won't see it as a good opportunity to go long or short on calls or puts. But again, just in terms of owning the stock, it's not something that I prefer personally. Okay. So thank you guys so much for watching. I hope you enjoyed the breakdown. And as always, we'll see you in the next one.